I think there needs, as I mentioned before, I think the borrowers are extremely shy about debt, and there's more than meets the eye. For a number of years, they've heard that banks are retreating, they're going back to their home market, they're not lending any longer. Debt is generally not available, or if it is, it's at terms that you will find unacceptable. I think we've come to a point now that education has to be made to borrowers that the market is live, the market is extremely active, and there are a number of solutions to meet your requirements, and you shouldn't be too worried about whether a debt fund is going to be more accommodating in a default than a traditional lender, or that a mezzanine lender that comes in as a pure loan player will be more aggressive, again, in a difficult situation. But I think the critical areas would definitely be land banks. I don't think it's anywhere near possible to fund land banks on a limited recourse basis across Europe. And I think, generally speaking, your secondary quality, I'm not talking about location, but I think secondary quality properties will be very hard to finance in a meaningful way. I don't think you'll get anywhere near 50-55% loan to value, because that is not where the tenant demand is directed. So to the extent that you're in a market where you can demonstrate tenant demand, and again, if you rely too much on a given industry for your take-up, that will be a little more complicated than when you have a variety of potential tenants. But other than land banks themselves and properties with poor technical attributes, I think you can pretty much fund whatever you are trying to buy, or refinancing is more difficult because you may be at a stage where your loan to value ratio is so high that even a mezz player is uncomfortable, and you will need to inject additional or new equity. So maybe that would be the highest hurdle in today's market.
Refinancing, okay.
Refinancing, yeah.
And that's where then there's potentially some opportunities for the equity players or the more aggressive investors in that sense.